These traditional central bank functions helped restore confidence in the financial sector and moderate the inevitable recession as the economy deleverages and adjusts to new realities. In this area, the Fed has performed very well, not repeating the mistakes that it made during the Great Depression that contributed to the Great Depression being what it was. On the credit policy front, the flow of credit froze up as financial markets began to realize the extent of potential real estate losses and started to deleverage. The Fed introduced new facilities to help specific credit markets, buying mortgage-backed securities and commercial paper, to name two. This is not a traditional central bank function. The Fed should have had greater faith in the market's ability to develop new credit channels and to redirect credit to the most productive uses. In this area, Fed performance was helpful in the short run, but harmful in the long run. It was inappropriate, and the Fed should unwind these activities as soon as possible. On the failing institution resolution front, the Fed joined the Treasury in ill-advised, damaging, and for the Fed, inappropriate and possibly illegal market interventions to save investment banks and an insurance company. This was motivated by the lack of legal tools with which to resolve failing non-banks in the ways banks may be resolved, but it was an end run around the law at a time of panic. It is also hard not to wonder whether personal Treasury relationships and past and potentially future employment on Wall Street clouded the judgment of Treasury and to a lesser extent Fed officials. One way or the other, the rules of the game have been changed and are now unclear. The long-run damage will be difficult to repair. So should we get rid of the Fed? The answer, I'll provide mine and you can then come back with yours. The answer depends on whether we believe not having a central bank would be better. In time, alternative arrangements could be developed to clear and settle payments across different banks or different institutions of payment and to print and coordinate the value in the market of private currencies. Can you wrap it up? Yeah, okay. The benefit would be the benefit of a purely private monetary system would be clear rules with very strong market discipline and private behavior. These are important benefits. The costs would be periodic financial panics and crises that would very likely overturn the system with massive government intervention. Let's not throw out the workable for an imaginary utopian best solution, and I will leave that to my partner to elaborate.
All right, Gene, you want to give your point of view from the abolish the Fed standpoint?
But it's fun to be appearing in opposition to John Fund. We both work for Rupert Murdoch. He acquired Barron's and he acquired the Wall Street Journal. Indicates to you that maybe Murdoch's world is a mansion of many rooms, although the killer anecdote I like to hand people is that Murdoch's publishing arm also puts out Howard Zinn's left-wing People's History of the United States. The man puts profits before politics, and indeed, the fundamental reason why I am pro-capitalist is because free speech, freedom of the press is something I hold dear, and private ownership of the means of production is a necessary condition to the maintenance of free press and free speech. Similarly, the abolition of the Federal Reserve is necessary in order to bring back government accountability to the people. It's fairly simple what has happened over the last few centuries, even before the Federal Reserve was created. The kings wanted to fight their wars. They couldn't borrow enough. They couldn't tax enough, so they started to print money. That's why the government began to control and get interested in controlling the money supply. In the more recent period, under Bismarck, under FDR, it became apparent that the welfare warfare state cannot be answerable to the people. It's got to depend on the mechanism of printing money, and the Federal Reserve is central to that. The only way to get back to our republic, the only way for the government to be answerable to the people, not to propose programs before it knows how to fund those programs, is that we abolish any means by which the government can control the money supply. Now, notice I haven't said anything about economics yet. I'm talking about fundamental political values that are vital to the maintenance of freedom. That's the fundamental reason why we have to abolish the Federal Reserve, and indeed, not just abolish the Federal Reserve, but understand that any government control of the money supply, because control of the money supply by the government has been ubiquitous for centuries. It was very, very apparent in the 19th century, before the Federal Reserve was created. That's also why we had monetary instability and corruption, or indeed the War of 1812 was financed through the printing of money by the New England banks, and then the protection of those New England banks by the government. All of that sorry history, it depends on government control of the money supply. Now, why else would I abolish the Federal Reserve? Because it causes business cycles. Warren Coates on the opposition, just spoke about what the Fed did and didn't do right after the collapse of the economy over the last couple of years. Well, let me give you a little anecdote that does not even require an understanding of Austrian business cycle theory. The driving force of the real estate bubble was something known as adjustable rate mortgages, ARMs. They were disproportionately where the mortgages were coming from, where the bad debt was being created. Now, adjustable rate mortgages are directly tied to the one-year rate, and the one-year rate is directly dependent on the federal funds interest rate set by the Federal Reserve. The Federal Reserve was directly, in that sense, financing the housing bubble. And indeed, on top of everything else, the crowning irony is that Alan Greenspan himself got up in front of a bunch of realtors and said, ARMs are wonderful. Adjustable rate mortgages are a great deal. You ought to sell them more aggressively to your customers. That's one simple anecdote that I suggest Warren Coates embrace, understand, in order to appreciate the fact that the Federal Reserve was part of the problem. It created the bubble. And then afterwards, it's the drug pusher, and afterwards it gets to run the methadone clinic and claim that it didn't push the drugs in the first place. So simply put, in order to have political freedom, in order to have economic stability, we need not just to abolish the Federal Reserve, we need to declare that money and interest rates are the province of the free market. When Congressman Ron Paul asked Ben Bernanke, do you ever get the interest rate wrong? Ben Bernanke said, yeah, we do occasionally get it wrong. We try, but we get it wrong. And Ron Paul said to Bernanke, well then, why not occasionally, why not eternally leave the interest rate setting to the market? Because you get it wrong, maybe the market will get it right a little bit more often than you do. Can I find that? Here's our
All right. And now, lastly, we'll have John Fund give his view from a pro-Fed standpoint, and then I'll get the ball rolling on the debate with a question to all of you. So, John?
I'm not going to wear the pro-Fed hat. To paraphrase Shakespeare's Mark Antony, I come neither to parry the Fed nor to praise it. I come to be realistic, and what we have is clearly a deeply flawed institution. But I would remind you that while certainly I think the Fed can be said to have exacerbated some of the business cycles and perhaps prolonged the period by which we flush out malinvestment, there were panics and there was market instability that led to the creation of the Fed. The famous panic of 1907 being an example, the one that J.P. Morgan had to step in and ameliorate at the last minute.